Hello everyone, my name is Hitesh and I welcome you all to YouTube channel of Trade Brains. In today's video, we'll be doing a fundamental analysis of the second biggest company of India, and yes, I'm talking about Tata Consultancy Services, or shortly called as TCS. This company's business is well diversified. They are basically an IT giant and they also feature in the top 10 companies in the IT domain. Now through this fundamental analysis, we'll try to break down as to what the company does, which all segment they are present, who are their major competitors, and we'll also do a bit of fundamental analysis using the quantitative data. So let's begin our discussion and learn more about TCS. TCS, as you are aware, comes from the house of Tata Sons, and Tata Sons, as we are all aware, is one of the most respected brand in the Indian business segment. Not just Indian, actually in global business segment also Tata Sons are very well respected. TCS's business is into various countries like North America, Latin America, Europe, Asia, Middle East and Africa and various other countries. So they are very well diversified. So what's the best thing about TCS? Their revenue is not dependent only in a certain sector of the world. Supposedly if certain economies have certain issues, then we don't have to worry about, because we know that TCS business is expanded and well diversified into various segments and sectors of the world. Now let us find out in which all sectors TCS has a major role to play. First of all, they are a major player into BFSI segment, that is banking, financial services and insurance sector. Their softwares are used by all the major banks of the world. They are providing ERP solution to various banks and financial services company. Just to give an example, the biggest bank of Israel, there is a Bank of Hapolim, uses TCS software, and this bank has about 30% business of Israel. So in various countries, all the major bank and various financial services and insurance companies are using TCS's software to run their operations. So banking and financial service sector is properly covered by TCS. They're also into retail and consumer business. They're also into communication, media, technology, and TCS is majorly working on the electrical vehicle segment, and which we all know is going to be the theme for the next decade. So TCS has smartly figured out that segment to be the one to watch out for, and they've already started working on development of that sector. They are into manufacturing sector, they are into life science and healthcare sector, and they are also into energy, public sector, travel, transportation, tourism. Name the sector, TCS has got a presence. Now you must be asking that how is TCS present to travel and tourism? Each and every sector is right now being covered by the IT spectrum with the help of proper technology, only that you can run that business smoothly. So TCS has been able to provide solution to those sectors also, and which is how TCS is also related to these sectors also. Now the next point which comes to everyone's mind is that what is the competition for TCS? Is TCS not being challenged at all in the market? And the answer to that is no. TCS is majorly challenged. The major competition comes from Infosys, Wipro, L&T Infotech, Tech Mahindra, HCL Tech. These are some of the major competitors for TCS. One fun fact, the total sales of Infosys and Wipro combined was equal to that of TCS sale in the previous year, and the profits of TCS were actually more than the combined profits of Infosys and Wipro. So that is how big TCS is. Just to put things into numbers perspective, TCS alone made a net profit of about 31,000 crores, and which was about 29,000 crores for Wipro and Infosys combined. So we can understand how big and how giant TCS is in the IT spectrum. Now we all know that TCS is doing very well in the current market segment. So is TCS gonna be affected at future? And the answer to that again is no. Why so? Because TCS is already focusing on developing products and technology related products which will be of dominance in the future market. So they have got the R&D in place, they do proper research, and they already have plans in place for maybe next 10 to 12 years as to what they want to do and how are they going to achieve those plans which they have in mind. Now is TCS a moat? Now as we all know, what is a moat? Moat is that protection which you build around your castle, that is which protects you again from the competition. So TCS, although is a moat, but their competition are very close to them. Just to give an example, the total sales of Infosys was about 75% or that of TCS sales. So it's not that Infosys is very far behind sales in terms of TCS. So TCS, although is a market leader, but yes, it is challenged. It has built a moat around itself with the help of technology, a great team, great leaders, great management team, plus the support of visionary like Ratan Tata himself. Now, if you carefully look at my screen, we have to understand what is the sales growth of TCS as compared to its peers. So I'll be using the example of top 5 companies in this sector, that is TCS, Infosys, Wipro, HCL Tech and Tech Mahindra. So 3 years compounded annual growth of TCS is about 15.48% and Infosys has a CAGR of about 19.36%. So Infosys dominates TCS in terms of CAGR. Wipro is about 6.62%, HCL Tech is 22.09%. So that HCL Tech is leading the spectrum in terms of 3 years CAGR. Tech Mahindra is about 10.91%. Now the next important point which we have to see, what is the net profit CAGR over the previous 3 years. So TCS is about 12.17%, which is considered to be good in this industry. Infosys is about 9.84%, Wipro is 16.47%. So Wipro, although might not have great CAGR in terms of sales compounded growth of 3 years, but in terms of profit they are doing very well. HCL Tech is 21.89% and Tech Mahindra is 7.21%. So if you look at these comparison, you can say HCL Tech is leading both in terms of CAGR and net profit, but the overall profit or sales number of TCS is much more than any of its competition in the market. Now let us also understand what is the debt situation of TCS. And it's a good news for all its investors. TCS is a debt-free company. Their debt to equity ratio over the last 4 to 5 years has always been 0. They don't have any debt as such to be worried about, which is where the investors don't have to be panicking about, does the company have debt, what will happen to the company? No, TCS is absolutely debt free. Looking at some of the valuation parameters, because this helps us in understanding how is the company growing. I'll be taking last 3 years data and we'll compare various valuation parameters. The most important one being the market capitalization. So over in the year 2019, the market capitalization of TCS was 10 lakh crores. In 2020, owing to COVID and various factors, the share price has declined massively, and which is where the market capitalization fell to 7,13,000 crores. But in 2021, the market capitalization has doubled for TCS over the previous year, and that is simply because even the share prices have also doubled for them. So there's a great news for investors. Company's market capitalization is nearing 15 lakh crores and we can only see it going up. Recently also TCS announced a major buyback, and which has actually fueled the sentiment of the buyers, and the share price of TCS is nearly trading at 4,000, and the TCS bought back the shares at a premium by paying nearly 4,500 rupees per share. So this shows the optimism of TCS and what is likely to be seen in the foreseeable future. The price to sales ratio has also been stable for TCS over 3 years. It was 9.02 in 2019, which has come down to 8.01, but there's nothing much to worry because price to sales ratio tells you that the company is slightly undervalued right now, because if the sales of the company is 1 and the share price of the company is rupees 8, that is how you get a sales to price to sales ratio of 8. So lower the ratio, better it is, because it shows the company has got a lot of meat in it. The price to earning ratio has been on a rise, which sometimes can be also a little disturbing, because we can say the prices have also already shot up multiple times, but considering the management and the quality of the products, plus them being the leader in the market, there's not much to worry. The ratio was 23.84 in 19, 21.14 in 2020, and in 2021 it has shot up massively to 36.25. The profit margin over the years has been consistent, although it has declined a bit over last couple of years, but the numbers are still one of the top in the industry. It was 21.55 in 2019, it came down to 20.67 in 2020, and in 2021 the number is 19.83. Price to book value ratio has gone up massively because the company has performed very well this year. It was 8.20 in 2020, and which has gone up to 13.73 in this current year. Now, what do we understand by this? That certain ratios have become a little more expensive. So we can say that the valuation is already on the higher side, and I wouldn't be surprised if investors starts getting a little skeptical as to how much then the company grow. But the company always comes up with surprises, and their product is of top-notch quality and liked by everyone. So which is where, although you might say that the company is slightly overvalued right now, but if I'm a long-term investor, I wouldn't worry about it. I'll just keep investing into it. Every dip for me is an opportunity to buy in TCS, and over the period of next 5 to 10 years, you never know, the returns could be again multiple times, and which is what has happened over the last couple of years. Now let us understand a little bit more about promoters holding and management. The management has got its plans sorted, and they know which is the growth part they want to achieve. The succession plans are also in order, and they are being continuously reviewed by the senior management. And another important factor which I look at it when I want to see what is the management doing is the salary which is drawn by the top guys in the company. And I'm taking the example of two of the directors, Rajesh Gopinathan and N. Ganapati Subramaniam. So over the last 3 years, the salary has remained consistent. It has been only 0.05% of net profit for Rajesh Gopinathan and 0.04% of net profit for N. Ganapati Subramaniam. So they haven't drawn too much of salary, and the numbers remain consistent over the next 2 to 3 years, that is 2019-20 and 2021. So it's not that they have drawn salary more than what the company is able to make profit out of it, and they have drawn a major part of it. No, they do take care as to they should take only the fair value and not just fill their pockets. Now promoters holding. Now this is very important because it gives us a picture as to what does the management itself feels about the company. Higher the promoter holding, better we can understand that the management also likes the company which they are operating into, and they are not willing to shed out their share. Tata Sons has got about 72% of the stake of TCS, and which is a good thing. You're not allowed more than 75%, so they have almost got the maximum allowed limit, and they are not letting it go, which means they're expecting much more growth in the performance and in the share price performance of Tata Consultancy Services. Let us understand a little bit more about the financial ratios. This is the last segment of our fundamental analysis. The first ratio which I normally talk about is the current ratio, because it shows the current liquidity status of the company, which was 4.17 in 2019, went up to 3.33 in 2020, and in 2021 it's 2.91, which means it's consistently on a decline, which could be a bit of sign of worry, but the ratio is still on the healthy side. If the company is able to manage this, then nothing much to worry about. The debt to equity ratio is 0.00 for last 3 years, so I am absolutely not worried about that bit. The interest coverage ratio in 2019 it was 210, came down massively to 46, and it's gone back to 70 in 2021. Now why is interest coverage ratio important? Because it tells you the ability of the company to pay the interest which they've accrued on the borrowings, and which is very healthy for TCS. Actually, it is one of the highest of any company listed on the stock exchange. The sales growth, although has dwindled a bit because of the pandemic and various factors, it was 18.98% in 2019, which has fallen to 4.61% in 2021. So TCS need to take care of it, because it's all a matter of how much you sell, and the sales growth should never decline. So TCS, I'm sure, is doing something about it. And dividend yield. Dividend yield is actually 1.20 in 2021, and it was 1.50 in 2019. So that also hasn't changed much. So this was the quantitative and qualitative analysis of TCS. Do let me know what do you feel about it. If there's some point I missed out, please put in the comment section. I'll make sure I don't skip those points in the next company which we talk about. I have series of companies lined up, and we'll talk about each and every company in detail. And do let me know if you want to talk about any specific point for any companies, and what do you think about TCS. Should you invest or not invest? Personally, I am an investor in TCS. This is no recommendation from my side. This is just my personal judgment about TCS. So we are not recommending it. Use your own judgment before investing it. But in terms of numbers, the company looks a very solid company, and I wouldn't be worried much about TCS. Again, thank you for your patient hearing. I'll again see you next video where we talk about other financial topics. Thank you so much.